there is reason to smile as far as Dr. PathLabs shareholders are concerned. Just looking at the way they have declared their numbers this quarter, very good internals as well. Let's take it forward with Bharath Uppiliappan, who's joining us, CEO of Dr. PathLabs today. Bharath, thank you very much for your time. There's a very marked reversal as far as your numbers are concerned, internals are concerned, but volume growth was at 4%. So if we dissect your traditional, high volume, low value kind of business, and then the core business where volume may be lower, but the margins are high, how are the growth in both these segments?
Good morning, and thank you very much for having me on the show today. And I want to wish you, your family, and your viewers' families a very joyous and healthy festive season. I would like to deconstruct our quarter. To begin with, I would say we had a robust quarter across all metrics. Be it revenue, we had a record revenue of 601 crores. We had a good profit after tax. We had a strong volume growth, better than the previous quarter one. In fact, our volume growth for the quarter came in at about 5.2%, not 4%. And if you remove RT-PCR, which is a declining test and which is no more in vogue, then the volume growth actually moves up to 7.7% or so. So I think compared to quarter one, where we were almost flattish to, let's say, positive 1-2% on volume growth, we have seen a sharp uptick on the volume growth. But yes, we still have miles to go on that front. Our number of tests which we have conducted grew by 11%, and that is a very encouraging sign. So overall, all in all, I think we have moved all the matrices to be in a better position than where we were in quarter one. And more heartening was the suburban performance, which for the first time after, I think, 6 quarters, delivered a double-digit growth number. And we are very encouraged by suburban because West is a large white space market for us. And as this business takes shape, we would have kind of become truly, let us say, represented well across North, East, and West. We still have some way to go in South, on which work is going on. Now, coming to your question on routine test, high-end test, etc., I would like to point out that both ends of spectrum did really well for us this quarter. Our SwasthFit bundle portfolio registered a revenue of 125 crores, which roughly translates to about 500 crores run rate revenue for the full year. In fact, this is the number we envisioned about, let us say, 4 years back. I'm glad that we are kind of reaching there, and we are now setting up new milestones for the brand. The second thing I want to say is our super specialty portfolio continues to do really, really well on the top end of the medical excellence pyramid we have. And both these things driven well is really what is getting us to be in the position where we are in. The third important factor is, in the quarter's growth number revolves around the fever season. We had a small innovation going on in the fever season this year in the full scale. And it revolved around 2 factors. One is on the product side. We introduced a bundle test for fever diagnosis. So typically, people would have gone and done sequential testing for various kinds of fevers before they came to realize what kind of fever they had. We introduced Fever Panel Basic and Advanced, 2 versions of it. And that really got what people are really looking for and clinicians are looking for.
Sure. No, sure, Bharath, point taken. I just wanted to get more angles into the conversation as well, especially on the margin front. Your margin was at multi-quarter high, 29% thereabouts, but the guidance still remains around 25-26% band. Why is that? Are you expecting some sort of headwinds in the coming quarters?
Oh, no. So just to clarify, the quarter 2 margins are typically higher for us. We had a strong operating leverage because a hub lab program, which can do a lot more of testing than a small satellite lab, those kind of labs really did well. So I think what we saw was leverage coming through. As we look at Q2, Q3 and Q4, on a full year basis, we would like to come back to our, let us say, benchmark margin of 26% or so. That is about the right margin profile for the business. We also need to reinvest back the margins of the business, be it on marketing, upgrading our digital quotient, and on various fronts. So I think 25-26% is a very comfortable range. It's a good range for us to have, and we'll continue to invest back in the business.
Will price hike be one of the levers for further expansion in margin? You've already taken one. Any more on the anvil?
So I think our results are getting misconstrued that all the gains have been on account of price increase. In fact, if you look at the volume, 7.7 versus a 14.4 non-RT-PCR growth, that leaves about 6.7% what is attributed to price. But honestly, if you cut that into two parts, 50% is price and 50% is mix. Now, mix is led by two factors, three factors rather. One is SwasthFit, second is super specialty portfolio, and third is a bundling we did around the season. So I think we have to understand that we have a very strong program going on mix management as well to be able to get a leverage on the bottom line while continuing to drive top line. On the price increase side, we are currently focused on driving the volume growth up, and all actions, all investments are towards volume growth. Price is not on the table. Price increase are not on the table right now.
What has been the impact of the corporate sector entering into the entire business, which is the diagnostic business? Now, whether it is Tata's or whether it is Reliance, they have sort of entered in your turf, and they are giving the same service, which is one pay one free, 50% discount.
So, Nikunj, I think, if you look at the history of this industry, at least I can speak for the last 7 years with a lot of confidence. Time and time again, it has been proven that frees and 1+1s really don't work. This is a business of medical trust where people really expect medical excellence to be able to take care of their health. Having said that, what we really have done in the past is to learn from our competition. Our SwasthFit bundle test program was inspired by one of our competitors. All our digital initiatives, which we have now taken to a new high, has all been, let us say, inspired by the digital ecosystem developing around us. So I'm sure as a resilient company with a lot of management bandwidth, money is being abundant, we will kind of put in place programs where we retain a number one position. Competition is welcome. Yes, indeed.
Competition is welcome. Thanks, Bharath, for making time and speaking with us. Appreciate you joining us.